Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders, and I am super excited to have Blane Markham here with me. And Blane, great to have you here. A lot going on. What are we going to jump into today?
Yeah, absolutely, John. Well, thanks so much for having me here. And really excited to be here on Wednesday for this eye opener. A lot of really exciting things happening around the markets today. We had some big news that last time we were together on Monday. We talked about some things people should really be keeping their eyes on. But today we want to cover those because, we had just blow it out of the water type of earnings report last night. Had some big inflation news this morning. It's really moving markets. So we're going to cover all that, going to dive into it. And then, of course, we're gonna look and see exactly what the effect was on markets today. We had a pretty outsized move, and then with everything going on under the surface too, we also have a brand new trade opportunity that we'll close out with today of how we're looking to play everything that's going on right now.
That's awesome. Yeah, no, I think you're checking all the boxes that we want to know about. So tell me a little bit, about this broader market. There is some headlines that I had to rub my eyes and read about two or three times to make sure I got them right.
Absolutely. Well, excuse me, the first thing I want to dive into was just the inflation report. So last time we were sitting here talking on Monday, I said there were several things coming up later this week that had the potential to be very significant in market moving events, and that's what's played out in today's trading. So this morning we just got the August PPI inflation report. So this is looking at the wholesale inflation numbers. And while we had a pretty hot number that came in for last month, the initial read of it, this morning, despite all of the fear mongering and a lot of anxiety around tariffs and what the effects are going to be, we got a PPI inflation report today. It actually declined. We had there was the expectation was going to have a modest increase, following last month's. Well, last month's number got revised down, and in this month for August, this report it came in significantly below the median Wall Street estimate. So it actually showed a decline in the PPI inflation for August. So again, like you said, John, it was a bit of a head scratcher, but this was really welcome news to the markets, and because again, last week we had just gotten a really weak labor report that was really stoking the fire that for the pockets of the market. They're broadly investors are really hoping for rate cuts. They're really focused on rate cuts. Last week's labor report really began to cement that we were likely going to get the first probably of a series of rate cuts starting next week at the Fed's meeting. Well, this morning's inflation report really only just further confirmed that, and actually even started to give rise to the chance of a even potentially larger cut, and probably setting us up for a series of cuts. Not only just one in September, but the market is now starting to price in that we're going to start getting a series of cuts through the remaining meetings this year. So one in September, one in October, one in December, and that's exactly what we're looking at right here, John. So this is the CME Group's FedWatch tool. These numbers are calculated, and the chart here is calculated based on just looking at Fed funds futures. That investors are trading. They're trading around interest rate futures, and so you can see this two bars here. Both of these, they add up to 100%, with the 90% probability here, 10% there. Markets are factoring in a 100% probability now of a rate cut happening next week on Wednesday at the Fed meeting. Of course, still the market's largely in the camp that it's just going to be 25 basis point cut. I think that would be satisfactory for the market, just seeing that we're starting to have interest rates and Fed rate policy lowered. But you can see that just 1 week ago, if you look down here in the bottom, that would be corresponding to this bar. There was actually a 0% chance of a double cut, a 50% basis point or 50 basis point cut at next week's meeting. That's now creeped up to a 10% probability. It's the highest that it's been in recent memory. So you can see some whispers kind of starting to drum up out there that, hey, we're seeing some pretty significant slowing in the labor market. We just got this very surprising inflation report this morning, seeing last month's number revised down. It wasn't as hot as we initially thought. Seeing last month's August PPI inflation as well actually declining. So maybe they're starting to people are starting to price in the case of perhaps we could even get a bigger cut to kick off a series of rate cuts.
Wow. Yeah, that's a lot to process. I mean, not what we expected. And we've really gone pretty quickly from I mean, think about this roller coaster, right? So Fed has Jackson Hole and kind of give a hint that we're going to get a rate cut. Everyone wasn't even sure prior to that. Then all of a sudden they're locked in that they're going to get a rate cut. Then we have PPI, the last report, come out, and it like pokes a hole in that balloon and it's kind of it's everybody a little bit, you uncertain about it. And then bam, now we're talking jumbo cuts. Now we're up
Yeah.
to like just all over the place. But yeah, so that's interesting. Definitely having an impact on the market. I'm looking at the indexes right now, and I got to tell you, the Dow looks like Philly's Karen, like it didn't get the memo on what we're supposed to. There's a party going on. Everybody's happy. You're supposed to be happy, Dow. What's going on? So interested in your take about why the Dow is down as much as it is, and
Sure
or
thing.
why the others are more up.
Right. Yeah. Well, I think it's obviously this is great news for equities. Seeing the market kind of starting to sniff out that we're going to be having a rate cut next week. Having that seemingly confirmed this morning is great. Broadly speaking, but I think why the Dow today is actually really not participating as much to the upside as when you're talking about the S&P or Nasdaq indexes is really because of what we're going to talk about next, and that it's the technology seemingly is kind of vacuuming up all of the excitement and flows today, and it's because of Oracle. So again, John, as we talked about the last time we were together on Monday, there was a big earnings report that was due this week. Pretty quiet slate regarding earnings this week, except for one. It was Oracle, and I said, hey, this is this is a pretty significant company here. They're obviously a major player in the AI build out. They're one of the hyperscalers. They're one of the main players providing a lot of this data center capacity and AI compute capacity. To make this whole AI revolution possible. They're one of the key players. And coming into yesterday's market close, Oracle obviously year to date have been a pretty strong performer. I think was up, about 65, 70% or so on the year. You don't quote me on that, but I think that's about what it was. So had a pretty strong performance, and they were reporting numbers after the bell last night. And oddly enough, they actually missed their Q2 earnings estimates, but it was their guidance that for the next couple years really just blew Wall Street out of the water. I mean, I think it left a lot of analysts really speechless because, again, John, this Oracle, this was speaking of the market cap, was roughly a $650 billion market cap company at market close yesterday. As you can see, the stock is up over 40%, 40% today. That is a mind-boggling move for a large cap company of this size. I mean, this
And
company.
on guidance too. It's on guidance. It's not on the earnings. That just rocks. I just don't even know how to process that.
I mean, it's unfathomable the amount of market cap that was gained in this stock just overnight because of the guidance that they were able to put out. And frankly, I mean, I don't think they would be putting it out if they weren't very confident in it because of how outrageously high some of these numbers were that they put out there. So there's a lot of really good signs to this. Obviously, given Oracle's role, as a major player in the AI race, this obviously is again a nice confirmation of everything that we're seeing in the AI build out and the AI trade, all the stocks that are, closely related to this. That's just another kind of, check off the list of, okay, hey, this thing is still running. We still have a really active trade here. I mean, but, just seeing this was kind of jaw dropping this morning. When I woke up and saw, where Oracle was trading in the pre-market, that it was up almost 40%. So it's kind of really sucking all the oxygen out of the room today. And, of
Or all
course,
the capital out of the Dow, right? Yeah.
yeah, exactly. So, I think that's, again, the Dow's pretty close to all-time highs as it is, but obviously did not experience the leap higher that, the tech sector and, of course, more tech-heavy S&P 500 and NASDAQ experienced today. And it's largely related to this report right here.
That's amazing to watch this all play out. And you just wonder how high can it go, you know?
Yeah. I mean, well, I'll tell you one thing. It's is very quickly approaching the $1 trillion club. So we may have our next member of the $1 trillion stocks or market cap stocks. We may be
Yeah.
looking at it right here.
Just to, point out here, I do believe it's slightly above the top Keltner channel. So
Just a touch. Yeah, just a
yeah,
touch.
right.
But yeah, a lot of enthusiasm behind this one today. Obviously, love to see a move in a stock like this. I mean, that's fantastic. It's really encouraging. Uh, but yeah, good point, John. You'll probably, if you just wait just a day or two, you may have a little bit better entry point if this is one that you're looking at right here. So yeah, this is not the trade opportunity for today. I just wanted to, bring this up because it was just such a substantial move, in a legacy player, in a major large cap stock. If you add, $400 billion in market cap to a stock like this, obviously it's going to be market moving. And that's not even to mention the effects that it's had on the other big, major AI players today too. Like the, Nvidia's, Broadcom's, every, major semiconductor player out there that's also a major input into this. So really impressive move today.
Yeah, awesome. So, obviously you always want to get right down to the brass tacks here. What is the trade that you've kind of uncovered for us today, Blaine?
Sure thing. Yeah. Well, obviously, really bullish move today. You can see that in the chart of the S&P 500 here. We kind of already alluded to it. The S&P 500 and the Nasdaq 100, they've all leaped out to new all-time highs. We've been talking about even though we've been kind of just barely scratching out new all-time highs for just about a month. We were in fairly tight kind of range-bound trading despite those new all-time highs. Today's news between the great Oracle earnings and obviously the PPI inflation, really kickstarting, people's enthusiasm about rate cuts has broken us out of that range. And particularly, regarding the rate cut story, that we very likely are setting up to have a rate cut next week. That's kind of what's led me to my trade idea for today. And again, John, last time we were together here on Monday, I said that a lot of the pockets of the market, whether you're talking about consumer discretionary or, the home builders, anything related to the, home building industry, they had been rallying quite a bit, over the past couple weeks because, this rate cut story had started really picking up and finding its way into the market and the price action of stocks. So a lot of these areas, a lot of the really interest rate sensitive areas of the market had really run, kind of got it a little overextended, got it out in front of themselves a little bit too much. And I was waiting on those opportunities to come in before I started looking at new opportunities in those areas. Now, as you can see today, even despite the really solid news that we got this morning, further fueling the interest rate cut story for next week, we can see this one opportunity here. This is for DHI. This is DR Horton. For those of you that are not familiar with this is one of the major home building stocks here in the U.S. So this is a major publicly traded home builder. Some of you may have even purchased a home from DR Horton in the past. Who knows? But this is one of the key home builder publicly traded stocks. Obviously, this is one that is going to benefit as interest rates begin to start coming down. Now, some of that's already started to be priced in. As you can see, the stock's been on an incredible uptrend. It really kind of started gaining some momentum in June, really started picking up steam in July. And ever since then, it's continued that really nice arc higher, making great series of higher highs and higher lows all along the way. We have some great trend line buy signals here in this chart as well. You can see our 21-day EMA trading above our 63-day EMA down here. And also on the bottom too, we have, this is another lower study. I don't always look at this one, but I think it was really telling for this chart too. It's just confirming the really strong uptrend and really the durability of the uptrend that we're seeing up top. So this is an on balance volume line or OBV line. And anytime you see this sloping up, what that's indicating is that the buying pressure behind the stock is significantly outweighing the selling pressure. And you can see that's been happening over the past couple months, really dating back to roughly the mid part of June, ever since this breakout happened. So that's just confirming the durability of this move higher. And now you can see, as we're talking on Monday, you can see the stock was pretty overextended. It was trading well outside of the upper Keltner channel band there. So it wasn't really offering quite the best entry point at those levels. It was a little frothy or a little overheated. But you can see in today's trading, it's come in a little bit. It's trading just a touch above 175 per share inside of that upper Keltner channel band. So offering a much more attractive trade opportunity and trade entry opportunity in today's trading. So The way I was actually going to target this one, John, it's a little bit different. So it's actually still with an in-the-money call option debit spread, but it's not very deep in the money call option debit spread. Excuse me. This is a little bit more aggressive setup here. So this is actually going to, the way I'm going to actually trade this is actually going to be, it's going to be behaving a bit more like a directional call option, but just has a small little bit of, buffer and downside protection built in. So you can see it's a much closer to the money. While still in the money, it's still just much closer to the money debit spread here. And so I was looking at the October 17th expiration here, and I was looking to buy to open the 170 and then sell to open the 175. So of course, this is a 5-point debit spread. And given that it's so close to the money, you can see obviously we can get into this at a much lower entry cost price as opposed to, a debit spread that was much deeper in the money, a little bit more downside protection. So it's a little bit more aggressive setup, has a much higher profit potential. And you can see it's currently trading at 2.9 points for the spread. I may actually have to bump that up to, I'm going to just bump it up to 3 or 295 just to see what the, yeah, it looks like I have a pretty high likelihood of getting filled at 295. But if I already get filled at 290, that would give this trade a 72% profit potential. So, you get that much higher, profit potential trading this much closer to the money spread. And you see, I just got filled right there. So, a bit of a different type of spread than what we normally look at here, John, a little more aggressive, but, really, really encouraged by what I'm seeing in the charts for DHI. They obviously have a great tailwind behind the stock right now with that interest rate cut story, starting to play out, and looks like there's some runway there. So,
Yeah, no, great way to play the news of the morning. Smart, calculated, putting a little bit of a buffer on the downside, but grabbing a big chunk of the upside. Love the strategy, Blaine. This is really sharp.
awesome. Yeah, I really appreciate it. Yeah. I was excited to see a little bit of a pullback in some of the home builders today. It's a industry I've been watching really closely for several weeks, and we had been here just personally trading kind of in and out of some of these plays a bit ourselves. But I was excited to get a new opportunity out there today and highlight this one for the folks watching at home.
Yeah, no, that's perfect, and that's the kind of stuff that we're logging on to these sessions for. That's why we're doing it. We hope everybody can get a chance to take advantage of it. We're going to keep doing this stuff like we did. We followed up a little bit on what's going on in the market, but we're going to keep an eye on this trade. I think this is a big one, especially leading into it. I'm going to go out on a limb here, and I am going to coin the phrase the double jumbo rate raise. So if anybody else uses double jumbo, because I mean, we went
Why
from
not,
maybe
right?
not to jumbo to let's go to double jumbo, right? How many buses can we jump, right? Uh,
Right.
so, but yeah, so we're going to be jumping on. We'll be back next week, and we're going to have a pretty exciting week next week. I can only imagine how wild it's going to be. But
Oh
thanks
yeah.
for taking us through all this, Blaine. Appreciate it.
Yep, absolutely. Glad to be here, John. I always love getting to sit down and talk through everything that's going on in the markets and kind of what I'm buying and looking to trade. So appreciate you having me here, and looking forward to getting back here on Monday for a really exciting week of trading next week. So yeah, hope everybody has a fantastic rest of this week and great weekend, and I'll see you back here next week.
All right. Take care, everyone.
See you, John. Thanks.